Value-added tax group, a new institution of the Polish order. I'm very pleased to greet you and refer to the changes. The value-added tax group is a new solution that assumes separate income tax and joint value-added tax settlements for the entire group. Related entities will be able to make significant simplifications in terms of registration. The general condition for establishing a value-added tax group is economic, financial, and organizational links between entities that want to form a value-added tax group. It should be emphasized that the value-added tax group is a separate form from the tax capital group in corporate income tax. Establishing a tax capital group isn't necessary to establish a value-added tax group. 15. Article 3 paragraph of the Value-Added Tax Act specifies that a financial relationship occurs when one of the taxpayers being a member of a value-added tax group holds directly over 50% of shares in the share capital or over 50% of voting rights in control, constituting or over 50% right to participate in the profits of each of the other taxable persons who are members of that group. The quoted statutory definition may seem similar to the definition of the parent company. However, these constructions aren't identical. 15. Article 4 paragraph of the Value-Added Tax Act lists 3 cases in which there is an economic relationship entitling to establish a value-added tax group. The main activity of the members of the value-added tax group is of the same character. The types of activities carried out by members of the value-added tax group are complementary and interdependent. A member of the value-added tax group carries out activities that are fully or largely used by other members of the value-added tax group. 15. Article 5 paragraph specifies that a value-added tax group may be created by entities that actually cooperate in order to generate profit for the entire group. The statutory definition lists 2 cases in which there is an organizational link. Legally or factually by common management. Directly or indirectly common management. Organize their activities completely or partly. The first benefit of creating a value-added tax group is simplification of registration. The value-added taxpayer is the entire group, not individual entities that are part of it. Such a scheme is particularly advantageous in relation to JPK files submitted by the entire group. Turnover within the value-added tax group becomes neutral, which means that there is no obligation to issue invoices and to use the split payment mechanism for internal financial flows. Turnover is recorded with an accounting note instead of invoices. The value-added tax group agreement is concluded for a period of at least 3 years with the possibility of extension. It is necessary to indicate a representative representing a given group. More information can be obtained in direct contact with the company's advisor and on the company's website. Thank you for your time and attention. See you soon.